Can AI actually generate alpha? The AI revolution has reached institutional investing, but there's a problem. A lot of AI alpha isn't alpha at all. Research shows many AI investment strategies simply repackage market exposure, factor tilts, or information models have already seen during training. In one benchmark of frontier LLM trading agents, 9 out of 10 produced negative stock selection alpha. The best generated an 85% return, but almost all came from market and factor exposure. Actual stock picking skill contributed virtually nothing. And trading isn't the only problem. AI models can achieve over 80% accuracy on simple financial spreadsheets, but fall below 50% on complex workbooks involving multiple companies and funds. In another study of S&P 100 filings, LLMs reversed the investment conclusion in roughly 1/3 of summaries, while producing fluent explanations. The fundamental problem? AI has made generating answers cheap. Verifying them is still expensive. So where does the real edge come from? Increasingly, it is moving down the stack. The model itself is becoming a commodity. Competitors can rent the same frontier model. The harder to replicate advantages are proprietary data, compute, energy, simulation environments, and verification systems. Look at firms such as Hudson River Trading, XTX Markets, and Highflyer. Their advantage isn't simply a clever model, it's the infrastructure underneath. The same applies to Numerai, where thousands of independent models are aggregated through a sophisticated metamodel. In causal AI, the moat may be the simulation infrastructure used to test models, not the model itself. So how should allocators evaluate AI managers? We propose spec. S, specification. Why were these variables selected? P, performance. When was the model wrong, and what changed structurally? E, explanation. Can you reconstruct an actual trade and explain why it happened? C, configuration. What happens when variables or assumptions change? The goal is to move from trusting a story to demanding something falsifiable. For allocators, that means stripping out market and factor exposure, testing beyond training cutoffs, auditing verification, and identifying genuinely unrentable advantages. The next generation of investment firms won't win simply by accessing better AI. They'll win by building the infrastructure that makes AI reliable. The model may be rented. The edge cannot be.